So is it time to buy call options on the SPY? We're finally getting a little bit of a pullback here after this big run. A few weeks ago, before we dive into that, a few weeks ago, right on this day, March 15th, I talked about how the SPY could have this upside air pocket. If you go back to the last video, it's almost 3 weeks ago, actually. And the reason why I said that is because we had this large sell candle, and anytime you re-enter as you're retracing, because we had this big sell-off and we're basically retracing, anytime you re-enter a kind of, I'm going to call it a naked area where there's not a lot of action, price tends to just sort of go right back up through it. It'll go right back up through it, maybe not quite as fast. This was one day and it took it, a week, but you get the point. There's really not a lot of congestion there, but now we've kind of hit some congestion. We're hitting that 290, 2900 on SPX level. So the question is, do we want to buy some call options here as we head into earnings season? And the short answer is not yet. And the reason why I'm saying that is because I just finished up a 13-year study on this exact setup that could be setting up over the next week or so. And the way this study went was with the 21 EMA, that's that purple line, and the 200 simple day moving average, that's the 200. When price was above the 200, which we are clearly above the 200 right now, whenever there was a pullback to the 21A where you close below and then you close back above, buying call options on that setup did really, really well, even during the bear market. And that's because if price was below the 200, you wouldn't take that trade. Anyone who wants to get a copy of that full study, I just posted a video on my website. If you want to head over to patreon.com/vertical spread options trading. I'm going to put a link in the description as well. Anyone who signs up in the next 21 days or really the end of this month, I'm doing this video in April of 2019. If you're watching this after this, I'm going to be posting it again later. I still need to wrap up the put side. I've already finished the call side. Anyone who signs up is going to get an instant download of the call video. It's about 30 minutes. It kind of explains everything. The key to that strategy, though, is there's two things. Let's go back to the chart. The key to doing it. So first of all, we want to answer, well, why do we wait for it to come back up? And whenever you're buying options, I know I do a lot of vertical spreads. It's the vertical spread channel. However, I do buy options as well. Whenever you buy options, you want the momentum to be going in your favor. So you don't want to, a lot of times when I'm selling put spreads, let's say, I'll sell put spreads when the candles are red. In this strategy, when I want the momentum to go with me when I'm buying a call options, I'm going to wait for that call option or the stock to be moving in the direction that I want the call option. I'm not going to go contrarian with option buying, if you will. The other cool thing about this strategy is that if it pulls back below the 21, and if any of you closet bears out there are right and the market just totally rolls over, then there's just no trade. It's pretty, it's got to go back in your favor for you to take that trade. The other key is the exit of the strategy. You got to know when to take profits and how long to hold and the strikes and all that. All of that's completely covered in that video. So definitely check the description. You got a few weeks if you want to pick that up. The other thing I want to just kind of point out real quick from a general market perspective before I go is today's action, the Russell has not actually cleared the 200, and it was more negative than the S&P today. So this is kind of a bearish sign. I know we're still kind of waiting around for the Chinese trade deal. The other thing that came across the headlines from a headlines perspective was the fact that the EU, there can be some trade tariffs, and it's probably not going to be a full-blown trade war with Europe. However, it just throws some uncertainty in the market. You did see bonds sort of, tick up today, but this actually isn't that. This was pretty scary a few days ago, but bonds have kind of like settled down here. It actually looks like a bear flag, but this is something to keep an eye on. So as the market pulls back, if bonds are trading flat here, then I think that the dip should be bought in so many words. Obviously, if we're buying the call options, we're going to wait for that setup I just talked about. The Nasdaq's outperforming. That same strategy actually worked well with the Nasdaq too. However, it's so bullish that you may not get that pullback back to the 21. And the last thing we'll kind of look at is I just want to check in on the VIX. The VIX is still pretty low, but you are getting a little bit of a pop here. Don't worry about these moving averages. Moving averages with the VIX isn't something that I usually look at. But anyway, the point is the VIX is getting a little bit elevated here. I do think over the next over the next few days, we probably get a little bit more pullback. I'm hoping we get enough pullback so that I can buy that call option. However, if we do pull back and the bonds are relatively flat, then over on SPX, I'm probably be looking to sell some SPX put spreads, and that's based on another study. So if anybody wants to get more studies and back test for these, moving averages and the things I'm talking about, definitely go check it out over on Patreon. And again, you're going to get this course as well as all the other back tests and studies that are included with that membership. So you guys have a great night. I'll see you at the next video. Thanks a lot.